Hi everyone, I'm Fatima with Fragomen, the world's leading provider of immigration services. In today's video, which is aimed at Irish employers, I'm going to walk you through one of the most important changes to the Irish employment permit system in recent years. This is the increases to the minimum annual remuneration, or also known as MAR, and the government's newly published roadmap through to 2030. I'll explain what's changing from the 1st of March 2026, why these changes are happening, which employers are most impacted, and most importantly, what you should be doing now to stay compliant and plan ahead. If you find this useful, please like and subscribe, and follow Fragomen for more immigration and mobility updates. Let's start with the basics. MAR, also known as minimum annual remuneration, is the minimum salary an employer must pay in order to sponsor someone for an Irish employment permit. For many years, these thresholds stayed largely the same, but over the past 2 years, we've seen a fundamental shift. In late 2023, the government announced the first meaningful MAR increases in almost a decade. Those came into effect in early 2024. Then, the new employment permits legislation formally introduced mandatory annual reviews of MAR, meaning salary thresholds must now keep pace with average weekly earnings published by the Central Statistics Office. After further consultation with employers and stakeholders, the Department of Enterprise, Tourism and Employment published updated thresholds in December 2025, alongside a multi-year roadmap running all the way to 2030. And the key date employers need to remember is this: from 1st of March 2026, all employment permit applications filed on or after that date must meet the new 2026 MAR thresholds. Now, let's talk about what actually changes in practice. From the 1st of March 2026, increased MAR thresholds will apply across most employment categories with a specific emphasis on general employment permits, critical skills employment permits, intra-company transfers, and permits in a number of sector-specific roles. Also, it's really important to note a few important clarifications. All figures are based on a 39-hour working week. And also, critical roles subject to the Public Service Pay Agreement or linked agreement are to be exempt from this, subject instead to the pay agreement pay scales. This will also apply to community and voluntary organizations where pay scales are linked to the public sector pay deal. Allowances continue to be closely scrutinized and generally cannot be used to make up salary shortfalls. And also, crucially, these increases apply not only to new hires, but also to those needing to renew their employment permit, meaning some existing permit holders may need salary adjustments to remain compliant. One of the most important updates is the reintroduction of graduate thresholds. And here's how they work. Graduate thresholds apply only for the first 12 months after graduation. And it's really important to know that the qualification must be NFQ level 8 or higher. For general employment permits, the graduate must be from an Irish institution. However, for critical skills employment permit, it can be from an Irish institution or an international institution. Also, at renewal stage, the salary must increase to meet the standard MAR threshold. Another major signal from the Department of Enterprise, Tourism and Employment relates to occupational and sector-specific exemptions. Historically, some sectors, including parts of healthcare, hospitality, and agri-food, benefited from lower MAR thresholds. The Department of Enterprise, Tourism and Employment has now confirmed that these exemptions are intended to be phased out by 2030. Exempt thresholds will increase faster than standard MAR rates, gradually aligning with the broader system. For employers who rely heavily on these exemptions, this is a strategic workforce planning issue, not a future problem to deal with later. One of the most helpful elements of this announcement is the roadmap itself. Between now and 2030, MAR thresholds will be reviewed every year. They will be indexed against average weekly earnings and adjusted as labor market conditions evolved. While 2027 figures haven't yet been published, the Department of Enterprise, Tourism and Employment has indicated that future reviews may follow a Q1 to Q1 cycle. This gives organizations the opportunity to forecast labor costs more accurately. It also gives organizations an opportunity to plan renewals and retention strategies, as well as build MAR increases into long-term hiring and salary models. From what we're seeing at Fragomen, the biggest impacts will be felt by employers in healthcare, in hospitality, manufacturing and logistics, early career tech and ICT roles, and graduate programs, as well as organizations with large permit populations approaching renewal in 2026 and 2027. Renewal of employment permits are where risk tends to surface, particularly where salaries haven't been reviewed in line with the new thresholds. So, what should employers be doing right now? First, you should audit your current permit population and identify who may fall below the 2026 thresholds. Second, review your upcoming renewals, as these are your highest risk cases. And the third would be to remodel your workforce plans through to 2030, factoring in annual MAR increases. And fourth, review any job offers not yet filled, particularly for start dates after March 2026. And finally, consider strategic timing and category planning, including whether permit switches or early filings may be appropriate. At Fragomen, we're already supporting employers across Ireland with minimum annual remuneration impact assessments, salary and renewal modelling, graduate and early career planning, and complex or borderline cases. If you need help understanding how the roadmap applies to your organisation specifically, our Fragomen Ireland team is here to help. Thank you for watching. These MAR changes are significant, but with early planning and the right advice, they are manageable. Please like and subscribe for more updates, and I'll see you in the next video.